Shankar, you're about to launch.
About tech, yeah?
No, I will ask you about tech, but I want to ask you more urgently about the stuff that you're getting into now, which is small caps, which is what people want to hear about. Do you think in this kind of environment, small caps will end up beating large cap blue chips hands down? Your fund is going to be largely a small cap fund, right?
Yeah, no, the fund is different. Fund cannot do only small cap because I've always believed just investing in small caps is like joining the mafia, right? It's very easy to enter, but it's impossible to exit. So you have to be very, very careful when you talk small caps. There are all kinds of companies out there, and I was in Dubai, on Sunday, and I thought Sunday was going to be a relaxing day, and I ended up having 5 meetings with 5 small cap promoters on a Sunday.
Indians?
In Dubai.
No, Indian promoters.
Indian promoters.
All of them.
In Dubai, who had come to see me, and they said, Sunday ko, yaar, Sunday ko kam se kam aaram karne do. I was catching a flight for Bombay that night. So there is this all kinds of promoters crawling out of the woodworks. Each one has a great story. But I can tell you many will fall by the wayside, and therefore it is a very treacherous area of the market. I just want to be very clear about it. However, my view is this, that yesterday's story is over, meaning your Asian Paints, HDFC Bank, Kotak Banks and all that, they are not going to give you any money worth the while at all.
Not even beat the index?
No, I'm 100%. I've been clear for the last 2 or 3 years, okay, because there was enough data to show that they had run out their course in terms of valuation expansion. And now, even if they grow, the multiples will keep compressing instead of the multiple remaining constant or expanding. Okay, so I've been very clear on that trade, and some of the numbers, HDFC Bank, not bad, but I mean the market is already saying that I've had enough of this. So the trade has changed. Fund managers may or may not change, but the trade has changed, right? So small caps is where money will get made. It is also the place where you'll get taken out to the cleaners for sure. So if you want a simplified back of the envelope advice, buy 50 of them, put 1 or 2% of your investable capital into each, and then hope that 5 of them will become 20x or 40x, which statistically will happen. It has to happen. That's the way the game works. If you think each of them is going to be 20x, forget about it. Many of them will become reverse compounders, meaning at the price you bought, they will keep halving from every price till they go to 0. And, you will see that happening. But I just wanted to add to what Nikhil was saying, and the venture capital ecosystem has distorted the whole spectrum of IPOs, of valuations, everything. And we saw that story 22 years back in the dot-com boom as well. That time people had a website and hence they got valuation. Now people have an app and hence they get the valuation. Okay, but there is nothing in the middle. Okay, so I was looking at the data, broad, back of the envelope. Which are the greatest companies in the world? And first of all, why do you call a company great? Okay, in my view, there is only one metric that defines a company's greatness: sustained long-term returns to shareholders. You can make money, lose money, free cash flow, not free cash flow, ROE, nobody really gives a damn. Agar 10-20 saal mein you are compounded 20% plus, you consider it a great company. Now look at the history. Apple listed in 1985. I think Microsoft listed around the same time, a year later. Okay, they were in their infancy. They were virtually in a garage or just outside a garage. Tiny companies. They listed right there. Amazon listed 1996, within I think 2 years of starting the bookstore. Okay, very early in the journey. Infosys listed 1994, almost like it was still a startup in every sense of the word. Correct? HDFC Bank, it listed when it was Worli and a few other branch offices. That defines how much returns your stockholders make. And all these are great companies in hindsight because they listed very early in their corporate journey. They did not have venture capital coming in the middle, providing the unlisted capital, whipping up the valuations, and then IPOing out when the businesses or the growth cycle was kind of coming to a near peak. And they distorted the entire return spectrum by capturing the return from start to the midpoint for themselves and then leaving the stock market, the IPO market, to fend for itself by listing those companies when they've already more or less sucked the juice out of the returns of those companies. So my view is that small cap investing, I am saying to every promoter who's got a good business model, please list as early as possible. Let the retail be your venture capitalist.